Yes, a correction is due. I know everybody keeps saying it and they're all panicking. Listen, it's a bit like a train leaving a train station. There are people who have been waiting for a correction since 2009 and have not been even in the stock market, and that's their personality. It's what they always talk about. We know statistically it's due because you can't keep throwing heads. It's been a year without a 10% correction on the S&P. What does that mean in terms of what you're supposed to do? I want to know practically what you're supposed to do. As a hedge fund manager, I don't have time for analysis which goes on and on and on for so long that the event's passed. What we're going to do is, unless we see a sharp enough downturn in the S&P, and I monitor it and discuss this every single week, Wednesdays and Fridays, put it onto my TikTok and YouTube to share with you guys what my analysis is. No skin off my nose for you to see it. uh, unless it's deep enough, we will ignore it. Would we buy into it? Possibly on a case by case, stock by stock basis. We don't make a hypothetical decision ahead of time until we've actually seen what's available at that time, as and when it happens. Why? Well, because what better things to do than think about a million hypotheticals? But one thing's for sure, when that inevitable 10% correction happens, uh, will that 10% be deep enough for us to exit? No. In and of itself, the 10% doesn't look likely for it to be deep enough for us to want to exit our investments. Trading is different. Trading, we might even short the hell out of it during that time of falls. But on the investing side, and we don't ever mix up the two, on the investing side, it won't be enough. 10% won't do it at all for us. Anyway, like, follow for more. Look at the links in the bio if you want to learn a lot more about investing.